Unless specifically indicated otherwise, the content expressed are my views only and not necessarily those of Life Pro Asset Management, LLC. The content presented is in no way an investment advice, solicitation, or an offer to sell securities or investment advisory services. The material is provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. I cannot assure the accuracy or completeness of these materials. As such, the information in these materials may change at any time without notice. Reference to these discussions about IULs and annuities or fixed insurance products. Investments on fixed insurance products are different from investments in the stock market. Any guarantees provided by a fixed insurance product cannot be assumed to be guaranteed for any other investment.
Welcome to the Rock My Finances show on K4HD Radio and Talk4 TV, where we put the fun in finance. Join Powerhouse Jennifer Jose, CDFA, CMC, and Private Wealth Advisor, as she collaborates with you to create clarity, control, and confidence with your money, your way. It's not about the zeros, so what is it all about? Let's find out. Now here's your host and weekly friend, Jennifer Jose.
Hey y'all, I'm back. So glad you're here with us today. I'm so excited about today. Now, I have to say that my job is to bring my clients and my audiences information for your own education only. I am not promoting anything. I'm not saying anything is for anyone. I'm not giving any advice. I'm just sharing with everyone what the heck is out there for us, because I believe that women have lost our voice. I believe that we didn't even really have an amazing voice around wealth. And so I want to make sure that we have all the education out there. Men probably know about this. They like finance. And I know I'm generalizing completely, so forgive me for that. There's a lot of women, most of my clients love to talk about money and finance, but there's a lot of things out there that are misinformation. And so I just try to bring you real information and education for you, and then you make the best decision for you and your family. So today we are going to talk about reverse mortgages. Now, don't close your ears and don't grit your teeth. I know they have a bad rap from years ago. That's not what I'm talking about. I'm just talking about education around a reverse mortgage. Okay. So back in the Bay Area, I did a monthly group. It was a meetup group. I don't know if anybody's heard of that. And we got together every single month, and it was called Wine, Women, and Wealth. And we had a total blast. And so this is where I met my next guest. She came to my monthly meetings, and I would have several women every month, and we would just talk about wine, women, and wealth, and whatever that meant. It was just a great conversation, great education. And I believe that we do better when we are collaborating with each other, and real collaboration, not fake networking collaboration, but actually, where are you struggling and how can I help you? I believe we all need to learn from each other. And so that's where I met my next guest, and I've known her for years now. And I'm going to bring onto the stage today Miss Cheryl McCarthy. She is literally a reverse mortgage expert, and she's been doing this for many years, and she's going to educate us on what the heck it even is. Come on, Cheryl.
Hi there, Jennifer. Thank you for the wonderful introduction.
Absolutely. Absolutely. I know that being in my position and being in your position as well, women in finance, women in this industry, this masculine dominated industry, I love to pull together with other women that are in this industry, because it is a good old boys club. It is a lot of networking down on the golf course, as they say. And so anytime that I can get a woman that I trust and that I admire and that is in finance and is real and honest and ethical, then I'd always like to get education from you. So thank you for coming on today.
And thank you for having me. I love your podcast, so I just love to be part of it. Thank you.
Awesome. I'm glad you're here. Okay, so we're going to dive right in. First of all, I want to know, this is what I ask all my clients. Okay. So, because we do get personal here and it's real talk about money. So let me ask you, and there's no wrong answer. What did you spend money on in the last week or so that brought you joy?
Joy. Well, so this is joy. I sent my niece, my youngest niece, she's just turned 21, graduated early from college. So I sent her cash.
Nice.
Yeah. So just 2 days ago, and that's the joy. And otherwise it was DoorDash for my handyman and myself today.
Okay. That's awesome. Thank you so much for sharing. Congratulations on Graduating early, that's pretty good. That's
It
really good. You don't
is.
hear that too often. It's usually an extra semester at least.
Exactly.
So that's great. Good. And then let's talk about joy and finances, because I know that's what you're all about in the end as well. But let's talk about what that means to you. So when she gets that money and she opens that up and she emails you, texts you, calls you, how does that make you actually feel?
Giddy.
Giddy. Great
Yeah,
word. I love
we were
giddy.
laughing, and she's got a job lined up in July, so now she's got some time off. And hey, you want to travel with me? And I'm like, yes. So we're looking at Iceland and Paris.
Oh my gosh, that's going to be so much fun. Both places I have not been, so
Me
I'm
neither, and they
excited for
were on
you.
my list.
That's going to be so much fun. I love that. My daughter and I actually just got back from Aruba and we had a
Ooh.
total blast. And my daughter's been to Iceland and loves it. In fact, her boyfriend's family's from Iceland. So, oh my gosh, you're going to have so much fun. I love that. And this is why we talk about the F word and the feeling around money, because if we all closed our eyes right now and pictured Paris or Iceland or Aruba or wherever you want to be and go, get those feelings of like packing, getting on the plane and going there. Like we can
Yes,
literally create that joy right now inside of our body,
that's true. I can feel
right? I
it.
love it. So that's why I love planning, because when we plan for things that we love, we can actually bring those feelings in right now and lower the stress, lower the anxiety. We can literally boost our immune system. We could lose weight. We can have better relationships with everyone just by feeling more joy. So thank you so much
That's
for
great.
sharing that with me.
Yeah.
I can't wait to see pictures of wherever you go.
Yeah.
Awesome. Awesome. Okay. So now we know that we all love joy and we want joy. So
Yes.
when we
More
talk
of it.
about money to most people, the first thing that they say, and the biggest fear that the country has from statistics that I've read, is that they're afraid of running out of money. When I talk with the women, the thousands of women that I've talked to in all these groups that I've
Mhm.
had, they all say they don't want to be a bag lady. They don't want to be stuck eating cat food. In fact, one of my presentations, my good friend Stacy's her big thing, and I used to have a picture of a bag lady there, whatever that meant. And it happens all the time. In fact, more
Yes.
in the last few years, right? So it is a real thing, which I understand, but the fear is not real. And so that's why we want to plan and get educated to all the different solutions that we might have out there so that we don't run out of money. So that is why we're here for everyone today. And I know reverse mortgage, it's a hot topic.
Yeah.
It's a taboo topic sometimes, like with financial advisors. Like, I am not allowed to promote, I am not allowed to give advice, I am not allowed to invest, I am not allowed to have really anything to do with that. So I just want to make sure that people have education around it, because I do know that in the good old boys club, and I love men, just so y'all know, and I'm single, just so you know. So it's not about the men thing. It's about the mentality of
It
men
is.
above women and men smarter than women. That's what I mean that when I say the good old boys club. But in the beginning of finances and investments, we only could make money off of assets under management. So no one's going to want to give up anything to go to any other solution, because then that would give up their livelihood. So I think that the finances industry got into a box of solutions around retirement and they stayed there. So I am breaking that box. Like, I want everyone to know every other thing outside of there so that we can all flourish and actually all have a really good time. So that's why I brought on Cheryl. So Cheryl, I'm going to ask you, I know you get this all the time, and reverse mortgages have changed over time, right?
Yeah.
So what would you explain? What is a reverse mortgage? Basic and simple. What would you say to that?
I say it is a federally insured home loan, very similar to first-time home buyers, veterans home loans. It's the third leg of that stool. And what I mean is that it's a government insured loan that allows homeowners 62 and older to convert some of their home's equity to age in place. And so that's a mouthful.
What do you mean age in place? Let's start there.
So it's for your primary residence only. And so a lot of my clients want to stay in their current home, and they want to, it could be eliminate a mortgage, payment. It could be that their house is paid off and they want to access some of that money, but they want to live in that home. And that's what I mean by age in place. And it's a social philosophy, if you will. So when it first became a federally insured loan, which was in the late 80s, and it was in response to what we heard about the bad old days in reverse mortgages, the government philosophy was to allow seniors to age in place. And they defined seniors as 62 and older so that they could stay in their home and maintain their home and maybe get some equity out of their home. Does that make sense?
I love it. It totally makes sense to me for sure. I love that you said it's 62 and older. They have to have equity in their home, and it's really for the people that want to stay in their home.
True. And so, there is a caveat to that. It is a loan like any other loan. So the homeowner owns the house. It's just a lien on title. They can sell it at any time. There is no prepayment penalty. The only thing that we require is that they live in the home at least 6 months of the year. But the reason why you wouldn't sell it in the short term is because it's expensive to set up. And so that's why we say, your home. But I have refinanced existing reverse mortgage customers so that they could get more money out or lower their interest rate. I have also had reverse mortgage customers sell their existing home and buy a new home with a reverse mortgage. And I know that blows everybody's mind.
Right. That is a key thing right there. We have to back up on, because that's amazing. Because again, the bad old days, we thought that we signed the house over to the bank, and that's not accurate. You're just correct. Adding a loan and a lien to the bank. To your house.
That is it.
Okay,
and so it can be paid off at any time. The big difference between a conventional loan and a reverse mortgage is a reverse mortgage, you're not making payments. They're not mandatory. So what happens is every month your mortgage balance grows. So
it's just reverse. Instead of your mortgage going down, it's reverse and your mortgage is going up.
That's correct.
Which means you are using your equity now.
Correct. And so the technical name from the product, because in banking, we always have really long names, is a home equity conversion mortgage. We call it HECM for short. HECM, home equity conversion mortgage. And then if you're talking about purchase, we can even, slim it down more. H for P, HECM for purchase.
I love it. Okay. So that you could actually be 62, sell your primary residence and scale down, because a lot of people do when they enter into retirement, and purchase a new house with a reverse mortgage.
Right. In the past, it used to have to be 2 transactions. You would get a conventional loan, put a down payment, and then come in and do a reverse mortgage. So I believe it was 2014, it might have been 2009, that you could do it in one transaction. So
that means that if, let's say a client sold their house for $1 million, like I had a few people do that over the last few years, because the rates are so great, and they cashed out, they walked away with, oh my gosh, some of them walked away with $1 million. So anywhere from $500 to $1 million, they can walk away with. They can literally go put that down on a new house with a reverse mortgage
and not have a payment. So I'm going to tell you about a recent customer I had.
Yeah. Share your stories.
On the peninsula, and had a mortgage on it, and sold it and cleared, I think it was about $800,000. So the conventional loan was he could go purchase a home for cash, purchase a home, put a down payment, and get a conventional loan, but have a mortgage payment, or purchase a home with a reverse mortgage. And so what he did is purchased a home for a reverse mortgage. And so he had to put a large down payment, but he
give me a percentage, like 50%.
Well, it's not percentage based. It's how much I can lend is based on 3 things: the appraised value, the interest rate, and the expected interest rate, and the age of the youngest homeowner. So the younger you are, the larger the down payment. So older you are, conversely, the less you have to put down.
Because you're not going to live as long inside the house, and the bank's going to get their money.
Exactly. But and so this is one of the other great things, and I you can never outlast your reverse mortgage.
Yeah, yeah.
So
What happens if, yeah,
exactly. So if we ever had another housing adjustment like we did in 2008,
I love your
2009.
nice words, a housing adjustment, but whatever. A total
Yes.
collapse, but okay, yeah.
Yeah. And that house values went down by half, in some cases. And
Yep,
lenders froze the lines of credit that people
yep.
had. They thought they were going to be able to run their business and access the line of credit, and suddenly it wasn't there. Once you have a reverse mortgage, you're guaranteed access to the funds. It never can be canceled, frozen, or closed unless you don't maintain the property tax and insurance, and we'll talk about that.
Yeah.
But it is guaranteed access. And even as recently as COVID, a lot of big banks have gone out of the home equity loan business. Now, when you want a home equity loan, you have to go to a credit union or a small community bank to get it because the big banks are not offering it.
Wow. Okay, so
I jumped around a lot there. I'm
that was
sorry
good
about
though.
that.
That's absolutely good. So then he chose to put
Oh,
down a
good.
large down payment.
Uh-huh. And then what happens with the remainder of that? He now has money in the bank. He had about 350,000 left to put in the bank.
So he can
And
live on
so
that and he doesn't have to stress.
he doesn't have to stress. He can invest that because it's not proceeds from a reverse mortgage, too. So he's got the proceeds from the sale of his house, puts a large down payment, doesn't have a mortgage payment on his new place. He didn't downsize necessarily, he right sized, so the place
Look
he
at you, your
bought,
catchy word.
yeah, the place he bought was as big as the other one, but it was just like one level and that kind of stuff. So it was great.
Okay, so because you scared me there for a minute when you said the I word, because I'm not allowed to say that.
Oh, yeah, I'm so sorry for that.
You're okay, but you said it from the equity of sale of the first property.
Yeah,
So that he can do whatever he
it's
wants with that.
proceeds and he can do
Right.
whatever he wants.
So then if you walk away with $1 million, you can do whatever you want with 500,000 and put 500,000 into your new home and get a reverse mortgage with no payment and still have access to your equity.
That's right.
Wow. Cheryl, this all sounds too good to be true. So
I actually had a customer who's a grumpy old man.
no.
Yes. And he said this, and I love grumpy old men, but the last time I said it, I got the grumpiest. So he said, this sounds too good to be true. Is this like a government handout? And that's when I said, no, it's not a government handout. It's a government philosophy. They don't want people over 62 to have to sell their house so that they're able to live in retirement. Does that make sense?
Because they don't have the structure to take care of all these baby boomers if they don't have a place to live while they're going through their long-term care or just even living the last 10, 15 years of their life.
So think about it before the baby boomers, they didn't even think about the baby boomer generation. Now that we're here, and we also don't consider ourselves seniors. So that's why I try not to use that word.
I would not. I am absolutely not.
Exactly.
And I'm close to it. So I get that. Okay, that makes sense. Now, let's be honest. No one's doing this SHIT, my favorite word. No one's doing this stuff for free. The banks are freaking making money. You're paying interest.
Yes. So the lender gets paid or the investor. So what happens with all mortgages is after you do it, it gets bundled and sold to an investor that pays the lender today and will get paid back at some point in the future when the loan gets paid off.
So the lender makes money by lending the money and then selling the mortgage.
Correct. And then there's a servicer assigned. And then the servicer sends the monthly statement. If there's a line of credit, you can access the line of credit, sends monthly payments, all that good stuff, pays property tax and insurance. So I get paid when the loan gets funded, if you will. Right. The lender or the investors get paid when the loan gets paid off.
So these investors are buying these loans and they're buy and hold long term, basically, is what they're doing.
Exactly. And they buy it at a big discount. But what they do is they pay the lender, Mutual of Omaha Mortgage, money. And then so Mutual of Omaha gets its money, pays me, and off we go. there's some of the biggest misconceptions about a reverse mortgage. You hit on the one is the bank owns my home. So that does not happen. It's a loan like any other loan. It can be prepaid at any time. But one of the biggest, and that if you're a husband, whoever, if there are two homeowners, it's when the last one dies or leaves the property permanently. So if they sell their house, the loan gets paid off. If they move to assisted living, the loan gets paid off because that's no longer their primary residence.
So what happens if what happens if the loan has grown? Let's say they lived 20, 25, 30 years inside the home and the loan's larger than what they could get from the sale of the property.
So this is called a non-recourse loan. You can never owe more than the house is worth. So if they, and the estate doesn't owe it. So they never get a 1098 from the bank or anything. They could walk away. If the FHA doesn't want to own the home, which is the Federal Housing Authority that insures the loan. So what they do is they say, if your heirs or you want to purchase it for 95% of appraised value on the date of death, you could do that. And so if the home is worth $1 million, but you owe 1.2, you could purchase it for $950,000.
Oh my gosh, that's great. And does everyone do that to the heirs?
Every loan, every reverse mortgage.
Every reverse mortgage allows the heirs or the estate or family or whatever
for 95% of the appraised value at the date of death. They send an appraiser out. It is. But the real benefit of this is that you can never owe more than the house is worth. And so once you're guaranteed and locked in, and we talked about 2008, 2009, customers that had a reverse mortgage didn't care what the house values were.
Exactly.
Because they were still able to get their money. They still didn't have to make a mortgage payment, and they were sitting pretty.
That's when I actually learned about reverse mortgages. I had some clients that had them, and I'm like, tell me about this. Like, I didn't really understand it. So let me go back to the reasons why some people, and my people that have told me, is they don't want to lose their family home. And so I think you just answered that question, is you don't actually have to, as long as the heirs or the estate or someone could qualify to purchase the home at 95% of the market value.
Well, so here's the thing. If they die and the home is worth more than the loan, the equity that the heirs inherit whatever equity there is. So
wow, that's great.
Yeah. So if the house is worth $1 million and they owe 500, the heirs inherit 500,000. The reverse mortgages are almost 90% fantastic for everybody. The situations where I found that they don't work is where they have a son or a child or somebody living in the house with them that wants to keep the house when they pass away. Because in that case, that person that's living in the house has to either get a conventional loan to pay off the reverse mortgage or sell the house, right? Or have assets from the estate that could pay off the mortgage, because the mortgage is due within 6 months of death. You can get extensions up to 1 year, but so it's 6 months to 1 year that the reverse mortgage has to be paid off.
Okay, that's a long time to be staying in a house without a mortgage and being able to figure stuff out. That's a real long time.
It is.
Being a grief counselor, I know it takes that long, but still, that's nice of the bank to take a chill pill.
Yeah, and that's one of the guarantees. So you can never owe more than the house is worth. As long as it's your primary residence, one of you living in there, you never have to make a mortgage payment. The big caveat with any reverse mortgage is property taxes and insurance. Because you're not making a mortgage payment, those could be liens on your property if you don't pay those.
But that's like a lot of people say they want to pay off their house because they just want to own this asset because that's old school thinking, right?
They
still have to pay property taxes and insurance. So no matter what, you're always going to have to pay that if you own a property.
And you have to maintain the property.
Yeah, of course.
And you have, in some cases, $500,000, $1 million locked up in this house. But you can't go to the grocery store with that. And you can't say, I got $1 million house and I don't have a loan on it, so, and it is old school thinking. People really want to pay down their mortgage. And I understand it. When you're in retirement, you have a fixed income usually, and you don't want to have a mortgage payment to do that. But at the same time, especially in California, you're putting a lot of equity into one asset, and a very illiquid one. So the downsides to a reverse mortgage is if you have somebody that wants to live in the house after you pass away. The other is that it's expensive to set up. So there's what's called initial mortgage insurance premium, and this is the big expense. We send to HUD 2% of the appraised value up to about 1.1 million. And then but that's a lot of money, right?
That's a lot of money.
It is. And so then you have the origination fee of $6,000 and that kind of stuff. It's expensive, but all of those expenses go onto the loan itself. There's only 2 fees that people pay out of pocket. One is HUD mandated counseling, and HUD is the parent of FHA, if you will. So HUD says, we want everybody getting a reverse mortgage to talk to a counselor.
That's great.
And the reason why they want them to talk to the counselor is that they understand the reverse mortgage, that they understand that they have to maintain their property tax and insurance, and that they're getting a reverse mortgage. So the other thing that they do is they make sure they're competent. I don't know how they make sure they're competent, but I'm sure it's a question or two,
There's a few things, because I've been through that on other situations, like getting the VA for my parents. They needed to make sure that they were there's actually a test. Like, who's the president? What day is it?
Oh, wow.
Yeah,
wow.
There's a specific test for competency.
So I don't know if it's that involved, but it might be. So I gave customers 3 pages of counselors to call from, and the counseling is done over the phone, and it usually takes less than an hour.
Oh, that's great. And that's just more education. So I think everyone should have
and
that.
Then once
they should do that before you have a kid, not only just a reverse mortgage.
Oh, and before you get married. Wouldn't that be
right?
great?
Right. Buy a damn car, $50,000 car. Yeah.
Exactly.
Okay, that's great. Okay, so it's not good for if somebody that wants to stay in the house, like an adult child or something. It's not good. What was the other thing you said?
Nothing. Well, that the 90%, the 10% is just the ones that want to stay in the house.
Yeah.
Or,
okay, no, I like that.
Okay. And, and then, sometimes it's special needs children, that they need a gift, because you're using the conversion mortgage, you're using this equity today. And if, you needed to go to that special needs child.
That's why I have a client, and that's why they did not do it.
Yeah. So one of the
But now they're going to have to sell the home, unfortunately, where the child lives, in order to get anything out. And it's going to be extensive, but there's nothing they can do about that. So here's another, this is what I'm finding with my financial planning business is, and I can feel it already. I'm almost 60 and I feel like I'm 40 barely. So I can see how our mindset is, because we talk about mindset all the time here, right? It is not at the current age that we're at. Our mindset
absolutely.
is right. It's always younger. And so people always say, oh, I'll think about that later. I'll do that later. Oh, maybe in 10 years from now, maybe in 10 years from now. And then it sneaks up on us. And I had a woman call me and say her husband had dementia, moving into Alzheimer's. She was trying to care for him at home. She was draining all their IRAs. She was draining everything. And they had $1 million sitting in their home. She didn't want to sell or move or anything. She wanted to do something different, but she couldn't because he was on the title and he had dementia.
So I've helped a number of cases like that. And it's unfortunate, even if they've had living trusts, there were some trusts done 20 some odd years ago that didn't do a durable power of attorney at the same time as the trust. If they did, they could have avoided it there. So then I've had to help customers where that has happened, where they didn't have a power of attorney and the person had dementia. They have to get a conservatorship.
Exactly, which costs like what, 20 grand or something, going to court, the time.
6 months Yeah.
Months and
And
months and months.
yeah. So, but so that's one of the things. The first thing I always, when working with clients is, do they have something set up, or are they going to use the reverse mortgage to set up their estate plan? That kind of thing. Because a durable power of attorney, and this is regardless if you're getting a reverse mortgage, is needed. You never know what's going to happen if you're in a car accident and your husband or wife needs to access the funds.
Yep.
The other thing is that and this is kind of different. And when I tell you this, you're going to just absolutely love me forever.
I already do, Cheryl.
The line of credit that comes with the reverse mortgage, it grows at the same rate the reverse mortgage grows. So if the reverse mortgage has an interest rate of 6.5%, your home equity line of credit grows at that rate. What that means to my clients is that they're able to access more of the home's equity over time. And it's only the unused portion. It's like having a line of credit or a credit card of 10,000 and the next month it's 10,500. Do you see what I'm saying? You're able to
Yes, I think that's crazy. So
and that's why I tell people that are coming up on 62, it is better to get a reverse mortgage early in your retirement and let that line of credit grow so that you can use it to offset market swings, like when the stock market's taken a wild ride. Rather than pulling out of your investments, you can pull from your home's equity, give the investments a chance to recover. And then overall, when you have the home's equity and your investment assets combined, your portfolio does better than if you first spend down all your investments, then access your house. That case, they might in fact outlive their money. Where if you do it early in retirement, there's this wonderful analysis. I think it's called the Monte Carlo analysis.
The Monte Carlo, yeah, that's what we do.
Yeah. So that if you access it early in your retirement, use it in conjunction with your other assets, your assets will outlive you.
So let me ask you this. Because I have a lot of fee conscious people, if they get it earlier, they're paying a interest on something right away, correct?
Correct. So we talked about the fees. All the fees are put on you have an initial disbursement. I have had customers tell me that they want to pay their reverse mortgage. I'd say about 60% of them, I'm still working. I want to make payments on my reverse mortgage. So my recommendation has always been save up 6 months. See how much of that goes into savings at the end of 6 months. And then if you want, take that money and apply it to the reverse mortgage. Because again, it can be paid at any time, but there are no mandatory payments.
And why would we want to pay the reverse mortgage? Is that just lower the interest that's gaining on the loan?
And
then it's like a regular loan.
Exactly. So on a regular loan, the lender gets their money every month, right? They write a check for the principal and the interest, or sometimes just the interest, especially on home equities. So on this one, you're not paying that stuff. But I have customers that say, while I'm still working, I don't want this loan balance to grow. Or just like you, that they don't like the increase in paying interest on it. So they can in fact pay it if they want. And when you make a payment to a reverse mortgage, you'll get a 1099 at the end of the year. 1098, excuse me.
1098.
Yeah.
1099 is where you make interest.
Yeah.
Interest that's charged. Okay.
Yeah. So that's the other thing, is that people that itemize on their tax returns, well, you're no longer going to have a mortgage interest expense unless you make a mortgage payment.
Got it. So if you make the mortgage payment, you're going to have a deduction. If you don't, then the mortgage is not the only thing that's on your taxes is your property taxes.
That's correct.
Okay. Well, we are going to get ready to run my commercial, and we're going to come back because I want to hear about success stories of someone who did it and is very happy, and why they're happy and how it changed their life. And then possibly, right, every good, there's a bad. So we have to look at both sides of everything. So I want to hear more of that when we come back. Does that sound okay, Cheryl?
That sounds great. Thank you.
Awesome. Okay, Juan, cue up my cute little commercial and we'll be right back. Stay tuned. We're going to have amazing information right at the top of the hour.
Wait, the show isn't over yet. There's more fun and finances ahead. Jennifer will be right back as we have a special bonus offer for you right here on Rock My Finances, broadcasting live on K4HD Radio and Talk 4 TV.
Hey y'all, it's Jennifer Jost. Are you ready to transform your relationship with money? Rock My Finances Club is your weekly mastermind for wealth empowerment. Join me live for your personal weekly group video sessions and access your personal portal with the video library at any time, including your success system and way more bonuses. Go to rockmf.com for your financial empowerment. Make yourself a priority today. Schedule a chat with me at rockmf.com and achieve your feminine financial freedom finally. Oh, and don't forget to ask me how to save 50%. See you at our weekly mastermind.
Okay, Rock My Finances on K4HD and Talk 4 TV is back. Once again, let's put the fun in finance with your host and weekly friend, Jennifer Jost.
Okay, we're back. Thank you so much. Okay, Cheryl, let's dig right in again. Tell me about one of the best success stories that you can think of. And it doesn't have to be about the money, but and how much and
somebody's lives.
There you go.
So I just got a call from a younger person, 64, a woman, self-employed, didn't pay, doesn't have a whole lot of income in retirement, was behind on her property taxes, her insurance, her HOA bills because her fire hazard increased 500%. So what I was able to do was eliminate her mortgage, pay off the back taxes and all that other good stuff. And I'm going to pay her property tax and insurance for her until she's age 90. So she just said, you don't know how good I feel that not having to worry about like when the insurance is getting paid and, am I insured? Can the HOA kick me out? I mean, it's just lovely. And I'm sending her some money every month. I was in banking and finance until 2015. And that meant like working for the big banks and, in all kinds of aspects, investments, business banking, mortgage, you name it, I did it. And I left to offer this product. And the reason why is, first of all, I do think it's the best thing ever. I mean, when I talk about this product, I believe in it. I love it. And I get to help clients every day, one customer, one family at a time. I keep them for life, so I am their banker for life. And I also get paid on it. So I call this my forever job. I never have to think about moving again, doing something different. And I get to help people every single day. I also help people retire. Like when COVID happened, I had a lot of folks that were suddenly retiring when they didn't expect to be. They were in their early 60s and they had expected to be working longer and this kind of stuff. So it gives homeowners the ability to kind of regroup. I also help divorcees or divorce, so if one wants to stay in the home, they can get a reverse mortgage and pay off the other, or you could sell the house and both purchase a reverse mortgage, with a reverse mortgage. There's all kinds of things.
So let's talk about that for a minute. Being a certified divorce financial analyst, I come across people expecting. I actually just talked to a woman who's financially abused. She called from a referral yesterday, and she has no access to anything, and they have money, and she has no access to anything. So this happens all the time, right? So tell me more about that. If you have two spouses in a home, they own the home, but one spouse is the breadwinner, can the other spouse get a reverse mortgage and stay in the home?
Yes.
And how does the breadwinner spouse get out of there and not have any responsibility for that home?
So as part of the reverse mortgage, and we would consider the ex-spouse a mandatory obligation. So we would pay off his or her income as when they, leave. It has, and this is something that they would have to negotiate,
Yep.
So sometimes it happens, and I had one happen where they were splitting up, and the place was San Jose or Palo Alto area, and it was, let's say, worth 11 million. And we do have a money. Jumbo, and I don't want to go into that specifically, but I could not lend enough to pay off the ex-spouse.
Okay.
So he would have had to take assets from somewhere else
For
to
that
buy her
whole
out.
thing. Yeah.
Exactly. So you look at it holistically. So if we are, and I've done this, two people live there, one's moving out, you get a reverse mortgage to buy out the one that's moving out.
And then you get to stay in the house and not have a mortgage payment.
Perfect.
Wow. Okay. So you got to be 62, y'all. Whoever's thinking you ain't 62, calm down. You have to be 62 in order, and obviously.
Yay. So when people call me and say I'm 62, I go, yay.
Yay. Now I can talk to you. Okay. Interesting. So why would people talk with you, get a proposal, and end up not going through it? Go through with it.
There's so many different reasons. And I just got one the other day that my sister told me not to do it, that I was going to lose the equity in my house. And it's like, no, you're not going to lose the equity. You're going to use the equity, this kind of stuff. So a lot of times, and sometimes it's kids, and 90% of the children, I love these percentages, and they're off the cuff, are like, Mom, Dad, do whatever you want. This is your equity. You built it up. A few say, that's my inheritance that you're spending now is my inheritance. And my reply is, my customers are the homeowners, the ones that I'm helping, not their kids. And if the kids don't want them to get a reverse mortgage, do they send them money every month? You know what I mean? They do.
You're going to make up for that for my long-term care.
Yeah. And if my clients, they traditionally, they were older. What also happened during COVID and also baby boomers retiring, my customer base is getting younger and younger. Like I'm hearing from them as soon as they turn 62. So the older you are, the likely your kids are well settled also. But there are some cases where the kids are not well settled and they do think of it as their entitlement to their home. That's the biggest one.
Yeah, I've run across that as well. So, but I like the fact that they can actually purchase it later, 20, 30 years later. My dad passed away at 94. My mom still just had her 90th birthday. She's in full-time memory care, y'all. She's been there. She had several strokes and she is kicking, like she's doing great. She just has no short-term memory, so she doesn't know what day it is. So every day is a Saturday and it's a blast.
That's fantastic.
It's great. I mean, if you got to have a stroke, it's the best thing to have. But I've been caring for them financially for many years, like many years. My dad, they definitely outlived their money, but that's a different generation. They didn't realize that they were going to live forever. So I know the importance in making sure that I'm going to make sure I'm good to 104 because I don't know how long I'm going to live. So I want to make sure that I'm good and I can choose where I want to go. Like I found a really great place for my mom, but people without assets, you're stuck when you need some care. And she's fully vibrant, walks every day, eats, everything's great, dresses herself, showers. She just needs to be reminded what's happening during the day, but she definitely needs 24/7 care. And obviously I cannot do that. So this happens all the time later on. So we have to plan. So my biggest tip here is you got to have a financial plan. If you want to plan with your kids, that's great. I love kids. I love beneficiaries. I love the whole family. And you just have to have whatever your plan is. I can't condone or give advice for reverse mortgages. I just want you to all be educated on everything that's out there. So definitely do planning for sure. Oh my gosh. Okay.
Jennifer, to your point, I love beneficiaries and kids too. And when people are making a big financial decision, they involve their financial advisor, their kids. I do presentations to whoever wants to talk about it. I'm there.
I love that. I know that about you. That's great. And that's what you need to do. Because the older they get, we have to talk to the whole family.
Yeah.
So let me ask you this. I think we kind of glossed over the fact that, okay, let's talk about the gentleman who got his home and that he was really happy. Now, how do they actually, like you said, send money monthly, or do they have a bank account, or do they have Do they get a lump sum? Like, what are their choices to access that?
I'm so glad you asked that. And that's usually one of the first things I cover. So you can access a reverse mortgage in 4 different ways, or actually 5. But one is this lump sum. We pay off any mortgages on the property. So, and then whatever, you get a lump sum, it's a fixed rate loan, and you're done. The other is what's called lifetime or tenure payments, TENURE, my New Jersey, New York accent. So you get payments for the rest of your life, and it's based on life expectancy, or you can do it for a lesser amount and get a line of credit. So
that sounds like an annuity type of thing.
It
Okay.
kind of is. So then I have customers that do a combination. They do some money at the beginning because they want to take and do repairs on their house. They get some money on the woman I was talking about that's retired now gets money on a monthly basis to supplement her Social Security, and then line of credit. So that if you want to take a trip or need to buy a car or do any of those things, you have this line of credit. And if you don't use that line of credit, it grows, right? So in conjunction,
it's like a savings account then.
It's like a house savings account.
Is that a guaranteed growth?
Yeah, it grows at the same rate as the loan balance grows. So to get the line of credit.
So the interest on the loan, you get the interest in your line of credit.
Yes, your line of credit increases by that. So if you have $100,000 line of credit, your line, and then the interest rate is 6.5%. Next year, it's going to be $106,500.
And then you're also eating into your equity on the other side that of the lump sum that you pulled out. That's also growing at the 6.5%.
That's correct. That's correct.
So that kind of balances it out
a little bit.
Not completely, of course.
Yeah, I do an amortization schedule that shows, what if, your house appreciates at the nationwide average of 4% annually. And then you don't use the line of credit. What does it look like? And then it shows how the loan balance grows. It shows how the line of credit grows, or, you get so much a month. What does the loan look like? And I'm going to say in about 75% of the cases, when I go out to age 99, there's still a lot of equity left in the house. Sometimes.
Oh, that's pretty good.
Yeah, sometimes.
So now you can run a lot of things and show everyone. So Cheryl, I love this. Thank you so much. Now we have this scrolled here, Cheryl McCarthy, Reverse Mortgage Advisor. Tell everyone, like, there's no cost and obligation to check this out with you, right? Like they can just.
Oh, no, not at all. I love doing proposals and I love talking to people. So obviously.
And you have webinars and all kinds of education.
I do all kinds of things. And one of the things is it's really easy to get me. The webpage is CherylMcCarthy.com or AlamidaReverseMortgage.com. It was very nice that Juan put down the other one. It's the company. It redirects it. So I do consultations on my website, actually has a calculator so you can run some scenarios. I can teach people how to download or send them like the H4P app, if you wanted to see how much you would have to put down on a property. It just gives you rough ideas, but yeah.
I think they're going to need to talk to you because it's so confusing and it's definitely a big thing and you educate so well. Cheryl, thank you so much for being my guest and educating us on reverse mortgages. It doesn't seem so scary and I'm sure we just scratched the surface of the education. So maybe I'll have you back for part 2 of the reverse mortgage education and we'll get in deeper.
That sounds terrific. I love talking about it.
Obviously, you're so good at it. Thank you so much, Cheryl. Everyone, thank you. Have an amazing day. Make sure that you do a financial plan and love your money, love yourself, and rock your finances. Thank y'all.
Bye-bye.
We appreciate you joining us today, and don't forget to subscribe to the Rock My Finances YouTube channel for more engagement and bonus content. Tell me, what is your money story? Let's find out with Jennifer, 4 p.m. Eastern, 1 p.m. Pacific, every Thursday right here on K4HD Radio and Talk4 TV. It's not about the zeros, it's about the F word, feelings. Feelings Jennifer can't wait to explore with you next week. Until then, let's all say, I rock my finances.